From Daily Forex, this is Chris. Taking a look at the British pound. The British pound has pulled back just a bit in the early hours on Wednesday, and at this point in time, it does look like we're going to test a more substantial support level, perhaps in the form of the 1.30 level. The 1.30 level, of course, is a large round psychologically significant figure, and therefore I do think a certain amount of attention will be paid to it. A lot of times traders in the retail world have no idea why these big round numbers matter, but most of the time it comes down to options trades. Remember, the options market is huge around the world, and it does have a certain amount of influence. Furthermore, the 1.30 level has already proven itself to be both support and resistance over the last several months, so there should be a certain amount of market memory attached to this area. To the upside, we have the 50-day EMA right around the 1.3120 level, and if we can break above that, then it probably has the market continuing higher. The trend has been very pro-British pound, but it's worth noting that the US dollar was pretty strong against most of its major counterparts during the day on Wednesday, and therefore we may have a little bit further to go to the downside. If the market were to break down below the 1.30 level, then I think at that point in time you will probably see the US dollar strengthen against most things, not just the British pound. But in this market, I would look for the market to test the 200-day EMA, which, at least at this point in time, seems to be hovering around the 1.2833 level and rising. All things being equal, I think stabilization is what you're hoping to see here, so you can get involved on the long side, because remember, the interest rate differential between these two currencies are basically non-existent at this point.